Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, well as their interest in Pinterest, PayPal is considering buying the publicly traded company. And Netflix's Squid Game is now the biggest TV show ever. And Facebook may be changing its name. So is a rose by any other name still Facebook? That and more, all tonight on Wall Street Wrap-Up. Hi, welcome to Wall Street Wrap-Up. I hope your week went well. I'm Andre Laborde. Our goal is bringing Wall Street to your street for today, for Friday, October the 22nd, 2021, and to get you ready for the week ahead. Well, last week I started the show by asking if you've tried to fill up your gas tank lately and the problems we're all experiencing with inflation and with that price of higher gas. Well, I recently finished a good book called Power Play about the start of battery-operated Tesla and Elon Musk at the helm. I was able to contact the Wall Street Journal reporter and author of Power Play to come on the show and talk about it. So just what does it take to start a car company? Well, tonight we'll be talking with Wall Street Journal reporter and author of Power Play, Tim Higgins. But before that, just how did the markets do this week? Well, all the major averages closed higher for the week. The Dow Jones Industrial Average ended the week at 35,677. That was up 74 points for the day and up 1% for the week. And the S&P 500, they closed today at 4,544. That was down 4.8 points for the day and up just over 1.5% for the week. And finally, the NASDAQ, they finished the week at 15,090, down 125 points for the day and up 1.3% for the week. The financials, the energy and consumer staples and real estate all ended up for the week, but taking it on the chin this week was communication services and technology and materials. And by the way, this week, PayPal, as we mentioned earlier, is exploring buying Pinterest at $70 a share. And earnings for Netflix came out this week, and Stifel Nicolaus Investments raised their price target for Netflix at $690 a share. And we'll be discussing Tesla in just a moment, but Bank of America and Deutsche Bank has put Tesla as a buy with a new price target at $1,000 a share. Tesla released its third quarter earnings this week and had its best quarter since the car company started, and it was their third straight record quarter. Well, going public in 2010, its valuation is now close to $1 trillion, and investors have rewarded the company this week by surging to a new all-time high, closing today at $909 a share, up $15 in just today. Well, my guest this evening, he's written a new book on how Tesla electric vehicles got its start and just how did Elon Musk start his association with the company. Now, unlike what many people think, Musk didn't start the company, but came in later as an angel investor. Tim Higgins is the author of Power Play, and he's here with us tonight. Hi, Tim. Welcome to Wall Street Wrap-Up.
Thanks for having me. It's an honor.
When I read your book, that I was surprised that I didn't know. Who was Martin Eberhard?
Yeah, Martin Eberhard was an entrepreneur in Silicon Valley, was really a man before his time. He had a startup that was involved with e-books before Kindles, before iPads, and he was racked by middle age. He's going through a divorce, trying to figure out what he was going to do with his career, and the solution for a midlife crisis is a sports car. And he becomes convinced that the most efficient car to have would be an electric car, but he can't find a sexy electric car. He and his friend Mark, they got a business plan together. They founded Tesla Motors, and then they needed to raise money. And really nobody around the valley was interested in putting lots of money into a car company at that point in time, because car companies were money losers, was the thinking. It takes many, many years and a lot of cash to see any kind of return. And in Silicon Valley, investors at that point were thinking more short term. But when it came to thinking big and thinking outside of the box, they found a guy named Elon Musk who had a lot of money from PayPal who was already making kind of wild bets. He had started that company SpaceX, a
Mhm.
rocket company down in the Los Angeles area. And it just turned out that Elon also was a big believer in the idea of electric cars. And he too thought it was time for a sexy electric vehicle. So he became Tesla's largest investor and became chairman of the board.
So actually, Elon Musk just started off as an angel investor.
It turned out making a car was a lot harder than they thought, and they stumbled for a number of years trying to figure it out, requiring a lot more money. And then you have to remember there was 2008, the Great Recession. The company got into a lot of trouble there, like a lot of companies. And at that point, Elon Musk becomes the CEO, and Martin Eberhard is pushed out. And that's really when Tesla and Elon Musk become intertwined going forward, as Elon becomes really the main face for the company.
In the 1940s, there was the Tucker that supposedly was a great car, but it fizzled out. In the late 1970s or maybe 1980, there was the DeLorean that, again, fizzled out. And so, as you just said, I mean, having a car company and starting a car company for the amount of dollars that it takes to put into this and the length of time for hopefully maybe even seeing an investment, it would take somebody as a strong visionary. Tesla would have gone out of business a long time ago if it would not have been for Elon Musk.
Well, there's absolutely many times where it nearly went out of business. It was looking into the abyss, and part of it was Elon's risk tolerance that got it through. Part of it was just kind of sheer personality, doing things that maybe other people wouldn't do. Maybe they would have pivoted the company, taken it a different direction. But he had this vision. The idea of making electric vehicles mainstream has kind of propelled him from a very long period of time. And so that's a key part of the company's success, without a doubt. But as one of the goals in the book was also to kind of show that the company was more than Elon Musk, that there was this cast of characters, an army of men and women behind the scenes who were very critical at different points in time. And part of that is Elon had this ability to recruit people at just the right time, people with the skills and the experience that the company needed, and they were very critical.
He had this ability to recruit, but working with Elon Musk was a difficult task. And I think, you even have in there, the closer you are to the sun, the hotter it gets. You wanted to stay further away, because if you said the wrong thing, your walking papers could have been given to you at any moment.
Absolutely. One period of time, for about a 2-year period, I counted about, more than 50 vice presidents or higher ranked executives left the company. It was a very turbulent period. And it's actually one of the challenges that the company has, is that they get a core leadership team in place for a project, a car. And then oftentimes when they move on to the next vehicle, they are starting over again, building a new leadership. And that was part of the story comes kind of what I call Tesla 2.0. He has become CEO in late 2008. And in 2009, he's really building his team that needs to be in place to bring out the Model S. The Model S was going to be a family-sized sedan that was going to show the world that they could make the best car that just happened to be electric. And they were really shooting for the moon there. They wanted to compete against Mercedes and BMW. And what that required was building a culture of people who wanted to do something that was different. They didn't have the same kind of resources as a General Motors. They didn't have the same kind of team, the large army of engineers to throw at it. They were scrappy. They had to be innovative. And that was the kind of culture he was trying to develop.
He wanted a car to be under $30,000, and the engineers just could not create that type of battery-operated car for being, in fact, I think it was, the cost was getting around $100,000.
You're hitting on this an interesting kind of point here, is that with the Model S, the idea was going to be a $50,000 car. The Model 3 was going to be a $30,000 car. But while they were working on the Model S, at the time it was codenamed White Star. Elon wasn't the CEO yet, but he was in the chairman position. He was very frustrated with what he was seeing because he didn't think it was good enough. And the executives working on it kept saying, well, this is within cost, and we can't afford all this other stuff. Once he became CEO, that position changed. And you're right. Ultimately, the Model S comes out, and it's a $100,000 car. And if you're working at a General Motors, working on the Chevrolet Impala, and your job is a $50,000 car, and you come out with a $100,000 car, you're not having a career at General Motors. And that's one of the differences here. Elon Musk was the CEO of Tesla, had the ability to raise the hundreds of millions and then billions of dollars needed to build these cars to the taste that he sought. This was really building a car that appealed to him, a luxury car buyer, and he knew, or he had the bet, that other luxury car buyers were going to want the same thing.
It reminded me a lot of Steve Jobs, because when Steve Jobs created a product at Apple, there was not wasn't, I found, developing a product to fill the market. It sounded like he was doing a product and then the market will find the product.
Hitting on a point there. He had this idea of what the market wanted, and the market didn't know it wanted at that point. I mean, now the idea of a $100,000 electric luxury vehicle is almost taken for granted. Look at General Motors coming out with the Hummer electric RV. Look at what Mercedes is doing. But at the time, a $100,000 car was a rarity, and this was an unusual thing. And, actually, when the car first came out, the Model S in 2012, and really in 2013, when they're really trying to sell it, there was a little bit of a struggle at the beginning because, yes, they had a list of people as long as my arm of who put money down to buy it. But when it came time to actually do the deal, there still needed to be a little arm twisting because, A, it's a lot of money, and it's an electric car.
When you have a car dealership, a car manufacturer, they're not allowed to sell automobiles directly to the public. They have to go through automobile dealerships, and through statewide, they're pretty well regulated because the dealerships have strong lobbyists. And probably not one of the strongest, I would assume, would be Texas. But Tesla was able to get around a lot of this by going directly in many different ways, including Texas. Is that correct?
Yeah. Well, you hit something on the head there. One of the big differences of the Tesla's business was that they were going to have direct sales, that you were going to go to a Tesla-operated store and you were going to buy as a customer directly from Tesla. Whereas if you're buying a Chevrolet, you're buying it from maybe Bob's Chevrolet, and they have a relationship with GM, and GM sells it to the dealer, and then the dealer sells it to you. And so this was a big change and very controversial. In Texas, you're right. This is generations of laws have been created in a lot of states to give those dealers a lot of protection. And Tesla faced a lot of challenges getting into Texas. And one of the things, the loopholes they found were they could open a store in a mall. It wouldn't be a technical store. They wouldn't sell anything there. It would be a gallery, a place of education. And so you would go in and kick the tires, if you will, and hear about all the great features or whatnot. And then you would say, well, I'd like to buy this. And then it would be like, well, why don't you go type on this computer, or we'll get back to you. Essentially, they'd be connected with somebody in like Colorado or California, and they would complete the deal remotely.
There was somebody from the Texas automobile dealership that tried to get Tesla to sign on, and supposedly Elon Musk got so angry with him that, how dare you want me to go the status quo.
The challenge is they scale. We've got millions and millions of vehicles on the road around the world. Even at this level, we're seeing it. It's hard to build out the infrastructure to take care of those customers. Mm-hmm. Now, one of the things, the arguments that they can continue is that there are fewer parts in an electric vehicle. Tesla has the ability to do some of the kind of remote diagnostics. They can fix some things with remote software changes. So in theory, perhaps the vehicle wouldn't need to go into a dealer for service as much. But the challenge we've seen is that customers who do have problems with their Tesla can have some negative experiences. He really seems to be wanting to push the company more online. And the other thing is, it's just hard to imagine him giving up that kind of control.
If you're just joining us, we're talking with Tim Higgins. Tim is a Wall Street Journal reporter. He wrote an excellent book called Power Play about Tesla. We're going to take a break, and we'll be right back. Don't go away. And we're back. We're talking with Tim Higgins from the Wall Street Journal reporter who just wrote a book called Power Play. Elon Musk and his thoughts of control. Did you get a sense that he always wanted this? That that he co-founded PayPal. He was basically kicked out of PayPal, and there were some times that because of his control, that and his tweets and things, that he was almost ejected via the SEC and through lawsuits out of Tesla as well too. Was that always in his nature to be the one at control?
Well, it's an interesting thing because he clearly doesn't like the day-to-day tasks of being CEO, the dealing with HR and marketing beyond Twitter, the meat and potatoes of selling cars, these sorts of things. If you talk to him, he wants to talk about engineering. In fact, he calls himself an engineer. This is where he wants to be spending his time. But the challenge he's had at Tesla is that he hasn't been able to find kind of the leadership team around him that he can trust in a way that he can offload some of that burden.
Give me the situation of what happened either before and after with a tweet that said, taking Tesla private at 420, financing secured. Now, I remember when that came out, and I remember the bombshell that it made.
Yeah, that's August 2018. This is amid Tesla is struggling to prove to the world that the Model 3 could be a viable car. Maybe it's time for the company to go private. And so he'd been having some talks in the background. It's preliminary talks by all descriptions, but he puts out that tweet and it sent the stock soaring. But it very quickly became clear that he hadn't ironed out all the details, that in fact the deal was not in the offing. And this became problematic for the company. SEC accused him of fraud. He eventually settled that without admitting wrongdoing. But nevertheless, it put the company at great risk for a while there because one of the things the SEC was seeking to do was to ban him from running a publicly traded company.
Then he decides to go on Joe Rogan's podcast. Well, that became big news because it was the next day, I think, in the Wall Street Journal. They had a picture of him. And of all things, Joe Rogan takes out a joint, a marijuana cigarette, lights it up and passes it to Elon, who is the CEO of a publicly traded company. And they start smoking pot during the show. I don't know whose idea it was, but why don't you go on Joe Rogan's podcast and see if you can iron things out for that tweet? What type of an effect did that have?
Well, it was amid all of this, so they hadn't reached a deal yet with the SEC. So the public knew that there was some challenges ahead, and this just added more fuel to your point on the fire. Questioning, what was his mindset? Is he really going to be able to hold it all together here? And that month that occurred in September, the final month of the quarter, was really a make or break period for the company. They had spent all this time building these cars, but yet hadn't turned a profit on them. And he was promising a profit that quarter. And the challenge was, were they going to be able to get them into customers' hands? They count the sale on the books when the customer takes delivery of that vehicle. He was pushing like 100,000 vehicles that quarter, which was a dramatic rise from anything they'd ever done before. And one of the problems the company had was that they hadn't been able to spend on the infrastructure, the system to deliver these cars. They hadn't built out the delivery centers that were going to be needed around the country. And adding even more challenge, because as if there wasn't enough, they only had one assembly plant at that point in California. And the way they did things were, the beginning of the quarter, they built the vehicles to be shipped to the East Coast. And at the end of the quarter, the vehicles are made for the West Coast. And it would result in kind of a big wave in the last few weeks of the quarter where all of these cars, almost 100,000, were going to be put into customers' hands. And the infrastructure wasn't there. So it was a mad dash. And this was an all-hands-on-deck sort of situation. People would be pulled from all over the company. They were hiring contractors to go drive cars to people's homes and then taking Ubers back to the office and doing it again. Customers, longtime customers of Tesla, were volunteering to help out at stores to help train new customers on how to use the car. Anything to make that turnover visit just a little bit faster. And lo and behold, it worked. They were able to eke out a profit that quarter. And that really stabilized the conversation around the company. They, again, were able to do it in the fourth quarter. One of the things that one of the things that was fueling that was the Model 3 was promised as a $35,000 car, but in those quarters, it was really more like a $65,000 car. They wouldn't be able to be profitable at the promised price. And so Elon had this kind of insight that there was going to be a window in time where this car was so hot that they would be able to get these buyers in the U.S., and they had to take advantage of it. And once they did that, then they focused their attention on Europe and in Asia, where they could get those early adopters who were willing to pay more. And meanwhile, this was giving them time in the background to kind of shave cost out of the vehicle so they could bring the car down gradually to make it cheaper and cheaper.
They're in China and Germany. I know they want to open up their plant in Germany. That at this moment, that the German government, I think, is in discussions with them. Do you think that he just recently announced that they'll be moving their headquarters from California to Texas, to Austin, Texas? Do you think this will be a help to Tesla? Also, because of what we talked earlier before about the dealership circumstance.
Well, it's interesting. So they've got two assembly plants under construction, like you said, one outside of Berlin and one outside of Austin, Texas. It's interesting. The Texas plant, Elon's been spending a lot of time there, in part because he's also spending a lot of time in South Texas, where he has this SpaceX facility where they're launching rockets. So it's an easier commute for him on his private jet to go between the two parts of Texas. The other thing that's going on is that a year earlier during COVID, he became unhappy with the California government officials who required that the lone U.S. assembly plant be shuttered to deal with the early days of COVID. And so he promised at the time he was going to move the headquarters, and I don't think a lot of people believed him. And lo and behold, that's what happened.
Sure did, yeah. Tim, what about this? I'm thinking of when Reed Hastings started off with Netflix. He was the leader of streaming before Hulu and Disney Plus and HBO Max. All the other streamers came on, but he had a jump start. Well, Elon Musk has had a jump start with EVs, electric vehicles, with all the others now, General Motors and Ford and such, that they're now getting on the bandwagon. Do you think, from your reviewing and studying of Tesla, do you think they can continue that forward thinking, that they won't let Ford or General Motors or Mercedes catch up to them?
What's interesting, let's just say that there was no Tesla tomorrow, that there was no Elon Musk tomorrow. I think we would all agree that Elon Musk's and Tesla's vision of the future of the car has won the day, to the point. From General Motors to Volkswagen to Daimler, these companies are investing billions of dollars to develop electric cars, in part because governments around the world are pushing for the electrification of those vehicles to fight climate change, right? And they're being able to do that in part because they can point to Tesla and say, as an example, look, they are able to make a vehicle that's electric that people want to buy, and look, they are profitable at doing it. Now, that's a pretty big change. In a lot of ways, that was the original vision of Tesla, to change the mindset of electric vehicles and to push the automotive industry towards electrification. So Elon Musk and Tesla have won the day in that regard. Now, what's next? Well, the auto business is a knife fight every day, every quarter, every year, and giants had been brought to their knees on many occasions in this brutal environment. So the fight continues. They essentially need to become more like Henry Ford, whereas the Henry Fords of the world need to become more like Elon Musk.
It was, since Elon Musk his force of energy was so much involved in keeping Tesla afloat and putting Tesla the way it is today. You know, people have burnout. Do you see a burnout coming for Elon?
He clearly seems tired a lot. I mean, the 2018 was clear that he was burning the candle at both ends. Friends were concerned. And this is a real issue. Yet, time and time again, he's shown that he's got more energy than a lot of people. I mean, he's doing the work on SpaceX right now. But the question will be, how long can he continue to do this?
I know I said one last question, but I got to ask you this question too, just out of curiosity. Do you think, and for our viewers, originally Tesla was Elon Musk had contacted Tim Cook, who was the CEO of Apple, to see if he would like to buy Tesla for $60 billion. Now, Apple had a war chest of over $240 billion, so they could have just written a check for that. And basically, Tim Cook just kind of shrugged Elon Musk off with Tesla. I'm just out of curiosity, your thoughts. Do you think Tim Cook is kicking himself right now that he could have written one check for Tesla Automotive for $60 billion?
Well, Apple has a tradition of not spending that kind of money, and also cultures are very different between Tesla and Apple. So any kind of marriage there would have likely been a rocky one. So does he kick himself? That's a good question. But I think some investors probably wish he would have made that deal.
Power Play and by Tim Higgins. Tim, I thoroughly enjoyed the book.
Thank you. It was an honor.
Thanks a lot, Tim. Tim Higgins from the Wall Street Journal. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. You can always write us at andre@wallstreetwrapup.info. Keep it pithy or concise. We'll be glad to answer your questions. And now for a look ahead for next week. But first, with the price surges of Tesla stock, how much is Elon Musk now worth? We'll have that answer in just a moment. Well, with the price surges of Tesla stock, how much is Elon Musk worth? Well, as of yesterday, Thursday, Elon Musk's net worth in Tesla and SpaceX is at $243 billion, making him the richest person in the world. Second is Amazon's Jeff Bezos. And by the way, that was as of yesterday on Thursday. Today, Tesla surged to over $900 today. That's $15 a share. So that's old news, give or take $1 billion. So, as we saw the earnings calendar, 1/3 of the S&P is reporting next week. So it's going to be a busy week for earnings for next week, and we'll bring it all to you for the market. Well, next week, we're going to be talking labor shortages around the country, also supply bottlenecks in all the major ports. We're going to be talking with Ron Hetrick. Ron is a labor economist and consultant and is the senior labor economist at MZ Consulting. Well, why do we have such tight labor markets? Is there too much free money out there from the federal government? Do you know the employers who may be having difficulties in finding workers? Maybe you are an employer that's having difficulties in finding employees. Well, join us next week. And as a reminder, we always repeat the show on Sunday mornings. But as you also know, the best way is to set your DVR so you'll never miss an episode. And that's our show for Friday, October the 22nd, 2021. Hope you've enjoyed it. My thanks always to Tim Higgins for joining us this evening. But as always, my special thanks is for you for allowing us into your homes tonight. So remember, you can always follow us on all the social media, Facebook, or whatever they may decide to call it, YouTube, Twitter, and WYES.org. You may have a fun weekend ahead and a productive week ahead as well. I'll see you next week for Wall Street Wrap-Up. I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.